Hey all, Ira Epstein, and here we are with your morning flash update. And this update is for Thursday morning, the 10th of August, 2023, and the time exactly 8:22 a.m. Central Time. So the CPI number did come out. And before we go looking at all this, why don't we head there and get an idea what this looks like? So let's first go to CPI. The month over month up 2%. 0.2%. That's exactly what the trade was looking for. The core ex-food and energy was up 0.2. They thought that would be up 0.2 as well, and that was month over month. Ex-food and energy core prices year over year up 4.7%. That's a tenth less than the expected 4.8 and a tenth less than we saw last month. The CPI number year over year, 3.2%. They expected 3.3, that down at 10.2. Now, food prices were up 0.2. Energy prices up 0.1. That is less than they rose last time, but up. Now, if you look at the jobless claims, a mixed bag here. You went up in the claims 21,000. They expected only up 3, but then you dropped 8,000 in the continuing. So again, we're getting this move like this and that where you get certain times you get a bump up in the claims, and then you take a look at the continuing, and the people are finding jobs. This is start going in the claims going to be impacted by summer layoffs that are soon to come. Think of all the kids going back to school, facilities shutting, camps shutting, things of that nature. So you're going to get a certain amount of that seasonally. When we come to the core number, there's something here for everybody. A big component that the Fed watches are shelter costs. They're too high. They went up again. So this is going to bother the Fed. And while you'll hear, oh, the Fed's going to sit still and so on, this report does not say the Fed is going to sit still or that it's going to raise rates. This report puts the big question mark on things one more time. I'm going to break all this down in my full research report at 11:30 today. You're welcome to go to our website. And when you go to the website, and I'll get to that in a minute for you right here, these are the offerings that we have. You just click on the blue to pick which ones you want. You can try a couple-of-week trial to my reviews and so on. That'll give you the videos that I do in the morning along with my twice daily written updates. I'm going to cover everything in great detail there, okay? So now let's go to the marketplace and get a feel for what we have. The stock market at first surged on the news, fell back. I was watching it tick by tick, then came up again, and now it's sort of settling in. In the dollar index, you went, as you can see here, from 102.39 and fell 79 points. And since then, you've come back to about midway through that. Most of the foreign currencies jumped against the dollar with the exception of the yen. Looks to me like the yen is trying to establish again, I'm going to stay in a downtrend. It's correction time, minor, but correction time in many of the energy markets. They've gone straight up. Some of the best gains we've seen recently. Just think about it. This market was just $67. You just got today to $84.89. You're due to get a little bit of a setback in price, but it's not necessarily a trend change. Natural gas certainly had a big breakout yesterday, an attempt at getting over Bollinger Bands and hanging there. Should get thrown back today if it's not a true upside breakout, and I suspect it's not. Bonds and notes agreeing with what I'm saying, in the sense that this report does not take the Fed and say, hey, we can sit still. Don't buy when you hear that. That's not what it said. It also didn't say yet that the Fed has to go up. It leaves this all in question. I'll review that in great detail as we go on. You had a little bit of a bump in the metal markets as the dollar fell. Now the question is, will the dollar stay down or how's it going to go by day's end? These are all going to be the big questions. At least this report's out of the way. We get the PPI report in the morning. Then we sit back. We get all the normal information that we typically get all month long. We'll see more on jobs data coming out weekly on other numbers, and we want to pay attention to them going into the next set of the jobs report at the end of the month, at actually the beginning of September, and CPIs as we go into the September FOMC. So if you were to ask me, which way does this put me? It doesn't. it still leaves the question wide open. I will see you all at the end of the day with our market wrap-ups. Remember to get to our free offers. You can just move your cursor up here, give it a click, or go to iraepstein.com, free offers. If you sign up early in the morning, I'll be able to get my morning review out to you right away. You have a good day. Talk to you then.